If the economy can't do well at 4% interest rates, then there's a problem with the economy. It's not the interest rates.
I'm completely with you. I'd love to see higher interest rates. But what that does is defers short-term pleasure for nearly everyone.
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
Hello, everybody. Skippy and Doogles talk investing up in your ear magnets. Here's the deal. This episode's about to be across the chain. We're going to start off talking about the South Park premiere. If y'all ain't heard about it, y'all ain't cinched it, do that. Second, we're going to talk about a company that has a very fascinating setup for its stock right now. Got to listen to hear what that is. And then we're going to wrap it up with the jobs report. Whoo, skippity-doo-dah. It's time.
Just for the record, I just have to go on the record here. I did not endorse or support topic number one. I didn't even watch it. I don't know what garbage you're talking about here, Doogles.
Okay, so these two individuals, Trey and Matt, they've been running South Park for a minute and a half now. And what they are known for is being completely irreverent. They don't care. They come out with what they want to say. They're also incredibly good at taking something that happened literally sometimes 3 minutes ago and inserting that into their episodes. They are so quick with how they bring things
I think that's one of the things that's really fun because you're kind of used to that with like news programming, right? It's like what happened 15 minutes ago or figuratively or 24 hours ago. And it's where you get fresh information. But they are incredible. They seem to be, I think because every deadline is like they are writing and editing up to the very last second they're allowed to.
That's right. So this episode, first I'm going to start off with, I'm going to tie this into investing in the weakest way possible, but just to give some kind of a tie into investing. Warren Buffett once said, very famously, be fearful when others are greedy and greedy when others are fearful. These two individuals right here, they see everybody else as fearful and they got real greedy. I'm going to tell you, real greedy. To set up that backdrop, people, if you've been following the news, you've seen this. We had this situation where Paramount was trying to do a big merger with Skydance Media. Big merger, don't know if it's going to go through. They need federal support. Whether these two things are tied or not, I'm just giving you like what the narrative is. Then there's beef going down with Trump. So they sign this settlement with Trump. They pay him $16 million, which is fairly unprecedented for a sitting president to get that kind of a settlement. Then you get Stephen Colbert that's fired. Stephen Colbert's show was canceled, so he doesn't have a job. Call that a firing or not. So all this is happening in the background. What's tied together, what's not, does not matter. The reason I set up that background is going back to the fearful greedy. It's because the narrative is one where people are like, everyone's just bowing down to the will of this individual.
Yeah,
right?
your job's on the line.
Yeah, your job's on the line, etc. Trey and Matt on South Park then come out with this episode. I'm going to give you a few highlights because when I put this on, I generally heard some of the headlines. I heard it was like anti-Trump, the White House is angry. I know they're not known for subtlety, but I thought there was going to be some subtlety in this, and they smacked in the face.
You just love to talk politics, don't you?
I'm talking entertainment. I'm talking about a kids comedy show.
Before you go there, because I'm sure you're about to outrage half of our audience. Good work. Can't the logic? To be fair, I haven't seen it. Can't the logic be that sometimes people need to laugh, and this clearly got you to laugh, right?
Oh, no.
That's not the logic.
No. That's what I thought maybe the logic could be. So, but it's so in your face. So where the episode starts is Cartman, who's the main character in the show if you haven't seen it. Cartman comes out and he is outraged because NPR is about to be canceled. And NPR is what he listens to get to make fun of woke people. Because he's like, look at all this woke media. How am I going to laugh and start my day with laughter?
This is a good setup. This is I like this. This is good.
Exactly. So that's how it starts. So then he goes on a whole campaign to try and get NPR saved because he needs to laugh at woke US. That's the general setup. Then they start going into, they quite blatantly talk about how it's time to rise up because there is a dictator now that is running the country, and that is why this is happening, right? That's what comes out because of this. Where it starts for me to get like, this is so blatant is if anyone has watched South Park historically, you may recall when they had Saddam Hussein on the show. The way they depict Trump is exactly the same way. It has Trump's face. It is literally his face over this character, but it's just like, it's the tone, the kind of speech they had with Saddam Hussein. They have Trump sleeping with Satan, like he snuggles up in bed, all naked. They show his penis multiple times.
What? This is a family show, Doogles. What are you doing? Come on.
I'm just letting you know.
Keep it moving.
And this is an important component because, and I'm about to tell you why. Small would be an overstatement for the way they depict this, and here's why it's important. No, I'm gonna break it up. Here's how the episode ends. So the episode ends with them saying, "Okay, we actually can't beat this system of the White House and Donald Trump. So now we have to just barrage people with pro-Trump messaging. That's the only way to get what we want." And so they have this whole like little montage at the end of this pro-Trump message with like Jesus and all this other stuff. And the way it ends is naked Trump goes into the desert, falls on the ground, and the punchline is his penis is teeny tiny, but his love for us is large. End scene.
I think this all needs to be edited out. I don't think we can say any of this.
Here's why I go into all that detail. We can say all this. Here's why it's important. Let's go back to the Warren Buffett thing. Be fearful that others are greedy, greedy when others are fearful.
What are you doing right now?
I'm telling you, this was so aggressive. It was so aggressive because this is a time we talked about the backdrop. How wild is this to come out with an episode that is in zero ways subtle at a time like this? No one else is doing anything close to this at the moment. Nobody else. Everywhere else you see capitulation or some version of that. And they are just like, we're going to do what we do. We're going to do exactly what we do, and it is going to be in your face. That's all I have to say. I watched this, and I was so surprised. So very surprised.
I'm trying hard to bring this back to not made-up quotes about Warren Buffett, but
That's not a made-up quote. That's a quote.
I mean, whatever. You're stretching. There.
Out of context, Warren Buffett.
There's a lot of comedians I respect, but is it Chris Rock that always says some version of the fact? I think Chappelle, in a way, says something similar, that one of the best ways to tell truth is through comedy, because if you just run up, especially in the political sphere, if you just run up and yell something in someone's face, it doesn't matter if it's true or not. The emotions get there. But if there's this veil of comedy in between, sometimes people can still smile and chuckle even when it's something that, I don't know, is uncomfortable. It's interesting. I'm ready to move on. I'll tell you that much, Doogles. You've terrified me. You're going to get us canceled. This is all your fault.
Happy to move on. I do want to be really explicit by saying Warren Buffett did not approve this message.
Oh, it's so good.
All right, let's reach into the fishbowl. What you got?
Whew. Okay. I want to talk about this from a really high level. As folks know, we don't give investing advice on the show, but we do talk about research recommendations. This may turn into a research recommendation, but what's more interesting to me is the setup of a particular company called Novo Nordisk. Okay, and I'm going to talk at very high level about how fascinating this is, and then we can talk about why the stock price is moving in a way that could be intriguing and could be a good research recommendation. But here's the highest level, and I'm simplifying for a reason, but if you feel like I missed anything, you jump in here, Doogles. Novo is one of the world's largest pharmaceutical companies. Been around for 100 plus years, almost 80,000 employees. Danish-based company. And we all know how pharmaceuticals work. You do all this research and development. You hope you find a drug with strong efficacy. Then you work on, regardless of where you are in the world, you work on the U.S. market because the U.S. market spends all the money. The rest of the world kind of does not. And that is a very complex situation, largely having to do with how the rest of the world views healthcare and how the U.S. views healthcare. So the dream for a pharmaceutical company has been like, oh, can we cure male pattern baldness? Can we cure obesity? Can we cure diabetes? There's a few others, right? But there are these things that the market for is nearly infinity. It seems like there's infinity dollars that would be spent.
It's a blockbuster based industry. Home run after home run. So you need big markets, concentrated drugs, crush it.
Mm-hmm. Yep. And that's the reason I mentioned the U.S. market. So Novo does a lot of R&D, and they come up with two drugs, Ozempic and Wegovy, that treat diabetes and obesity.
I would say, that is what they are meant to treat. I'd say they treat more of the I need to lose 5 to 10 pounds to look good for the summer type situation of suburban moms.
Is that the world we're in? I don't know. This is also interesting.
All I know is I go out to like one of my son's events, meet the parents, have a good time, and then I see the person a week later and they look like half their former selves. Okay, continue.
Well, listen, on another note, I'm intrigued because there appear to be some benefits for like triathletes and stuff.
Yeah.
The point is these drugs so far seem like home runs in perfect niches where you want to hit a home run. To illustrate this a little bit on the financial side, their revenue growth compounded over the past 5 years is nearly 20% per year.
Not bad. Not bad at all.
So these drugs get so popular and the demand is so great that they literally cannot make enough of it. So the FDA gives this approval that happens in times of scarcity. I don't know much about the actual facts, but the high level here is they're like, oh, some other places can make it, even though Novo Nordisk has the patent till 2032. You can make it while the supply is short. So Novo goes out and builds, I don't know, 3 or 4 of the world's largest factories to catch up with demand. And then other players in the market go, this is a pretty good thing. The list price of this is $500, but I have this shady blacklist pharmaceutical, I'm exaggerating here, in New Jersey that's making the same stuff. And I'm selling it to my customers directly online. So this is like Hims, this is like Row.com, this is all these other pop-ups. And this goes to your point, probably to the suburban people that want to lose 5 or 10 pounds. I can sell it to them for $150, and it's the same drug effectively. It's not FDA approved. There's a whole other, I won't go into the details there. But it's like, seems like this loophole is working. The problem is that loophole officially closed in February this year. And no one's being diligent about strongly enforcing that. So it comes out on the earning call this week and says, we have this problem. We're lowering our guidance because people are buying the stuff that's a third of the price. That's a knockoff. That's technically illegal. The stock drops 30%, and we can talk about where we go from there. But the highest level piece of this...
Can I pause you for one moment, just for clarity? Their earnings are next week. They came out
guidance.
They came. It was one of those classic company comes out before the earnings call to give a warning. If there's material information, you can't hold it for that long. So continue.
Okay. So I find the financial impact of all this incredibly fascinating. But this highest level picture of someone goes out and does 20 years worth of research and develops a drug that let's just assume is a good thing. I don't know. Maybe in 20 years it won't be. And they do that in 2 spaces where there's the most demand.
Okay.
And then there happens to be a loophole where other people start manufacturing the thing and selling it that in a way that does not protect their IP and does not encourage research and development for the next drug. And then the management team does what I think you'd want any management team to do, to say, this is impacting our forecast, so we want to be fair with our investors.
Of course.
To me, this is a slippery slope. I know. Well, and on top of this,
Trump's
out there writing, I'll get there. Trump's out there writing letters saying to all pharmaceutical companies saying, you better reduce prices now. So there's like 1,000 things where Novo is not, it's a challenging investment at the moment, which I understand. But the slippery slope I'm talking about, Doogles, is do we really want to disincentivize the future R&D of the next big drugs by saying we'll find some loophole where you can go to any provider online and get the knockoff before the patent expires, before the intellectual property?
Yeah, I get that point, because the reason why these drug companies are able to do 20 years of research because they get 20 years of protection on the other side. I'm rounding numbers. I don't know what the exact law is at this point. And so then if you take that 20 years on the other side, the 20 years of benefit, and shrink that to unless we say that someone else can do it right now, that makes it hard to run this kind of operation.
Well, and the other piece is this is kind of like venture capital in a way. You might have 10 drugs that fail, like 10 R&D cycles that provide nothing for the one drug that actually hits.
Yeah, that's right.
To me, gosh, I just go, sure, like I'm not sure that the prices are fair. I'm not sure that every pharmaceutical company has our best interests in mind. Like, I'm not trying to get into any of those hypotheticals, but I'm just going, if you misalign the incentives like we seem to have, that's a really bad thing for the next 20 years of R&D.
That's right. You can't have that much uncertainty in an industry where you need that much upfront capital to be deployed in order for success to happen. it can be quite troubling.
So I find it surprising that there's not stronger entities within the U.S. government immediately suing all the abusers of this IP and removing them from the shelves. No one seems to care.
You honestly are surprised?
A little bit. Yeah.
Do we need to go back to the last segment of the show?
Oh, okay, hold on. You think this is an administration thing? This is about some sort of deregulation or something? Like, I don't think of the enforcement here. I guess the FDA has less funding. Maybe there's less people to monitor these situations.
So my next comment may have to be cut because this is purely political. I'm just going to say that. Yes, right now there's both less funding for different parts of the administration. So there's less resources. And from what I see outside in, there's a disproportionate, at least relative to what I've seen historically, a disproportionate amount of the resources that do exist that are focused on protecting the president. We will sue you if you go after the president. We will sue you if you say something bad about the president. I have not seen much that is, we will sue you because you are hurting industries that could hurt the U.S. economy. Things like that. We will sue you because you're going against the Constitution. Like, I haven't seen things that protect the country. I've only seen things that protect the president.
I don't know about that. So back to Novo on the research recommendation front. Here's the 52-week range. High of $140 per share. Current price is what, like 47, 48.
Yep.
Okay?
Yep.
That is insane. The stock was never worth $140 per share. It clearly got out over its skis, right? In my opinion, the stock is certainly not worth $48 a share, but whatever. You can make your own opinion there. I find fascinating about this situation is it's like we talk about all the time. You always look at the stock chart and go, oh my goodness, if this stock was trading in the 40s, I would buy the whole thing. And then the stock trades in the 40s and you go, oh my goodness, U.S. law doesn't exist anymore. The president is writing personal notes to pharmaceutical companies saying your prices have to come down. There's tariffs coming on your manufacturing because you do some of that in Europe. You certainly do a lot in the U.S. There's 10 other things. So the reason I wanted to highlight this is because there's a reason stocks trade at the prices they trade
That's
at.
Right. That's exactly
And if you wanted to have conviction and get behind this, it is not an easy thing to do. From headlines, I'm reading the headlines at the moment. It may be an easy thing to do if you compare current valuations to historical valuations over the past 10, 20, 30 years, because it's completely out of that range. But also, this is why it's so fascinating to me. Also, when they spend hundreds of millions of dollars to create manufacturing facilities to meet demand, the company makes that massive investment. And then if they turn around on the other side and the FDA says, oh, actually, all the knockoffs still work, again, you just cost the company hundreds of millions of dollars on top of the probably billions of dollars that you cost them in the R&D expense for 20 years to get to this point. It seems really bizarre. This is a very bizarre situation.
Yeah, this is one of the cases where you often talk about probabilistic outcomes. Mm-hmm. And there is the reason why a stock can be trading where it is because you take the available information that exists at that time. There's a story. It's usually not for no reason. Sometimes that occurs, but usually not for no reason. You take that story, you've laid out the story here, and you have to look at going to probabilistic outcomes. What is the probability that what's being talked about right now will be upheld? What's being put in place right now will be upheld? If that is not upheld and things change back to what it was, let's call it 7 months ago with regard to this, then what happens to the stock? If it is upheld, then what happens to the stock? And you have to take those probabilities into account. I'm doing this as a quick aside. I'm doing this right now when it comes to Brazil. As you know, yes. I've made sizable bets. I'll call them. They're investments. I've held them for a while now, for the most part, in Brazil. And about, was it 3 weeks ago, the administration came out and put a 50% tariff on Brazil unless they release or stop going after Brazil's former president, right? Like that's basically the statement. And so I'm like, okay, what's the probability that in a month, either Brazil comes to the table and says, okay, sure, or they give the U.S. something in which we release it, or the probability this upholds, or whatever. But it's all probabilities, not predictions, but probabilities. Same kind of difference, but in a completely different industry, completely different setup, backdrop. But it's all about probabilities.
I feel like the probabilistic outcome here is starting to get pretty compelling. But again, that's a decision for each of us to make individually. It's funny, some of this, it's just funny the confluence of events. that can happen, and it needs to happen to do a 70% drawdown in a stock. One of the really fun things I like doing about these days, because I have a couple losers, I'll call them, are at like I have another big holding that's at 10-year lows in an industry that is beaten down right now like no other time in history, except for maybe 40 years ago. I love looking at these drawdown charts, Doogles, and looking at the max drawdown that a company that's been around for 100 years has ever had and seeing where that compares to their max drawdown currently. Novo is right there. Like, Novo is effectively at the biggest drawdown in their history within 5-10%. Diageo, who is at like 12-year lows, is at the biggest drawdown in their history right now. It's fascinating to watch. Again, is it fun to buy those things? No. Will my portfolio make great returns? Sure. Will it be worth the heartache? Probably not. Like, honestly, probably not. I've been through this with like the Babas and the Metas and every other stock I buy. And I'm not convinced, even though you make money in the end, that it's worth the heartache.
Oh, God bless you. That's all I have to say. God bless you. All right, should we go on to the last topic?
As long as I can get a quick rant in. Doogles apparently is going to make us talk about jobs report, the jobs report. We are not a jobs report podcast. Then again, we're not a South Park podcast. You might just want to throw this podcast in the trash, guys.
Oh, so, no, you love this. You love this
tell
episode.
Me about the jobs report, please.
So there's so many things that happened in this jobs report. First, I'm going to rewind back about a month to give a soupçon of credit where credit might be due. About a month ago, the Wall Street Journal had a headline, "The jobs market is starting to fall apart." Justin Lahart put this out there, and he walks through a few charts, says a few things about what's happening in the jobs market, because there's so much narrative about how the jobs market's still so strong. Look here, look there, look everywhere. Yeah. It's beautiful. I'll just say one of the lines he says, and then we'll fast forward to today. In this piece, he says, "Evidence is mounting that the headline jobs number could be overstated, and that the pace of job growth has been significantly slower than what the monthly jobs employment report has shown." That's what he states then. This was about a month ago in early July. He put this out there. Now you come out with the jobs report, which does a couple things. One, it dates for the prior month, what's the estimate on what net jobs added are, what sectors they come from, etc. And it goes back and looks at prior estimates, because that's what they are. I'm using the word estimates intentionally because they're estimates. Then they go back, and as more information comes in, they revise. This revision is aggressive. That is one of the most important things about this jobs report. So I'll give you the numbers. So in May, 144,000 jobs was the number reported in May. That was revised down to 19,000 jobs. So 125,000 job difference in the negative. In June, the number reported was 147,000 added jobs. That was revised down to 14,000. So 133,000 jobs decline. So if you look at the first 4 months of this year, there was something like 600,000 jobs added to the labor market. The last 3 months has seen closer to 100,000. When you look at that, plus the July number, the estimate that came out was 73,000. By the way, of that 73,000, about 73,000 came from healthcare and social assistance jobs. Mm-hmm. So this is what happens in the job report yesterday, which sent the market into a bit of a tumble. The other things that happened that are related to this was, one, and I'm just going to use quotes here, so this is not my words, these are quotes. "Powell is a stubborn moron," was what was stated in the press, and he needs to be sent out to pasture. You can take that with if you believe that or not. The reason that was put out there is because there was the rate cut, like we need to cut rates, we need to cut rates, we need to cut rates. Probabilities that people are betting. So the futures on rate cuts for September went to basically 100%, which is worth whatever. The paper, it's not even written on because it's digital. But the probability of rate cuts that went up to 100%. So Powell's an idiot. The other thing that happened was the head of the BLS was fired because of a report that showed data. I don't know what to do with all of this, but to me, it's very meaningful.
You've worked in a plethora of organizations, right?
I have.
Have you ever seen the head business development person be fired for consistently underperforming forecasts?
Yes, I don't think that's a good analogy, but yes, I have seen that, of course.
I knew you'd say that.
Yeah. The difference is the head of business development's job is to create the numbers.
I just say it.
Not to report the numbers.
Fair point there.
That's the...
I was trying to run away from the political nonsense as fast as possible, but I couldn't do it. Okay. I don't know. To me, this is something that happens all the time, and I'm not that fired up about it. The revisions were large, but the revisions were large 5 years ago and 10 years ago, and like this kind of just happens. To me, this is, so what?
Yes. The big thing is the revisions are a big part for us being able to look at the economy. Like, it's meaningful for us to look at the economy and start to say, where do we think we actually are, et cetera. That's why the revisions are important. I think the firing of the head of the BLS is the more important data point here.
Fair.
Because this is one that says, okay, so now if we didn't know where we might have been sitting in the jobs market before, but now we're getting a better sense, it feels like it's going to be less likely that we're going to know in the future, because if the data is not okay,
the person could get fired.
The person could get fired.
The scariest point to me is that, like, there were already people over the past 5 years claiming that this data wasn't trustworthy. The data does not get more trustworthy by firing someone with the appearance that they got fired because the data they're reporting, again, not the data they're in control of, the data they're reporting appears to be not pleasing. I mean, you did something earlier where you said the market reacted to the poor jobs report negatively. There's some truth to that. I just argue it's so complex. The market was also reacting to new tariffs being put in place.
That's true.
And
that's
1,000 other things. This is tough. I mean, in 2025, we've created a schizophrenic market because we've pulled these levers that we don't have great historical data on, and we've done it all at once, right? Yep. We did major tax reform, and then we did major tariff reform in a way that hasn't been done for 100 years. Yep. And the current economy has no semblance of what that means. All while the certain aspects of the economy have been slowing for years. Other aspects are not. There's immigration ramifications in terms of payrolls and hiring. Like, all I want to say is I don't know where we're headed here. The people that are betting on a rate cut in September, good luck to you. I have no idea if that's going to happen, et cetera, right? Like, this is just confusing to me.
It is. It is tough. It's the other thing that comes back to some of the conversations we've had when I look at this is we've talked about how I'm going to put, this is hard to do, I know, mentally, but put a bunch of I'll call it the humanity element of this aside for a second and just talk about the system of the U.S. economy. Because I know that this has impact on individual people's lives. We've discussed how interest rates in the country probably needed to go higher previously. And the discussion right now on cuts, I understand where they come from when you look at the micro data, but we're still in a place where sometimes to me it feels like we're trying to protect like the shortest of short terms on elements. Like we're putting Band-Aids on something where like there's obviously a huge wound that happens here. And I don't know what a rate cut serves us in the long term, given that rates aren't that high. Like it would be so different if we were sitting at 12% interest rates. Mm-hmm. I'd feel very differently. But we're sitting at like 4 to 5% interest rates. I can't remember exactly where the line is right now, which is like a fine interest rate number. It's one of those cases where I kind of say, if the economy can't do well at 4% interest rates, then there's a problem with the economy. Like let's figure out how to fix that. Like there's a bigger issue here. It's not the interest rates if we can't deal with that.
I'm completely with you. I'd love to see higher interest rates, but what that does is defers short-term pleasure for nearly everyone. When your country lives on debt, pretend rates were, again, 10, 12. Pretend they're 10. The economy grinds to a halt, at least all the economy that's based on spending that's driven by debt, which forces you to rebuild the foundation of your personal financial situation and the country's financial situation for better days 10 years down the line. Mm-hmm. No one, all parties, no one that's ever stepped a foot in Washington, whether you're there as a tourist or not, likes the idea of deferred gratification when it comes to strengthening the financial foundation. It's disappointing.
Powell might, although I don't know if it's that pure. I think there's a lot probably going on in that guy's head right now, so it's probably not as pure as I just made it sound.
I actually there's a talking point about sports referees, right? That if they did a good job, one of two things happened. One, you either didn't notice their presence, or two, they made both sides equally mad. The thing I like about Powell recently, and I have problems with some of his historical decisions is like, I think he's alienating everyone equally. And I think that's what he's supposed to do.
I'll say one thing. You might disagree with how they do their jobs and their output, but there are 3 people in this country that I believe are just saying, I'm going to do my job. That is Trey, Matt, and Jerome.
Let's loop back to one thing. I got to pull this up. So Trey and Matt are not grads of the University of Colorado, but they famously attended the University of Colorado.
Accurate.
Another famous Colorado grad is Christian Bloomstrand, who's a investment portfolio advisor. He did a breakdown this week that I think is fascinating, relating to massive earnings wins for Microsoft and Meta. Okay, so both those companies went up 10% after hours after they reported earnings. And I want to give you a few stats from that, because he is now arguing that the current market is about as bubbly as he's ever seen. But just relating to the 7 largest U.S. companies, they now have a combined value of $20 trillion, which is unprecedented. This is his words, 37% of the S&P 500. So step back, think about that for a second. You have 7 companies on the 20 trillion value. You could go back as recently as like 2020, and to say that 7 companies would be valued at $20 trillion is out of this world crazy.
Go to March 2020 specifically and say that.
It's bonkers. So that's 55% larger than in 2000 or 2007. So you compare back to peaks. And large cap growth stocks continue to be, their valuation compared to small cap value stocks effectively is outsized. It's more disconnected from each other than it ever has been. It's a fascinating time. I don't need to go through necessarily all the other stats in his tweet storm, but 37%, Doogles. So you go, get your paycheck, you put $1,000 into SPY to represent the S&P 500, and $370 is in the 7 largest companies in the U.S.
And this is where I don't even think that you have to believe that the market's overvalued. I think you could state, because the other part of this is that around 30% of the net income also in the S&P 500 is held within those same stocks.
Yes.
So those 37 and 30 aren't the same number, but let's just round them both, one down, one up, and say that it's justified. Let's just say it's justified, even if you say that. You don't have to believe that this represents an overvaluation. You can just believe that it represents fragility, because what you're relying upon is those 7 companies to keep doing their thing. Regardless, you can say it's justified today, but it's fragile. It's kind of like we've used a couple analogies. You brought up the business development person, right? Let's use an analogy of an individual in a company. Your company's chugging along, growing at 200% a year. I'm just going to go buck wild, 200% a year. And there's a human being that is a maestro of AI that is writing all this code, creating the best AI agents, and your company keeps chugging along 200% a year. And you go, this is phenomenal. We're growing really quickly. And that growth is justified. And if that person steps out in the street tomorrow and gets hit by a bus, our company goes under because they know everything. That's the difference between justification, whether or not this is, I'm just saying you can believe in justification, and then the fragility that can also cause.
Well, Mag 7 is currently trading at almost 34 times earnings. For anyone that doesn't know, you only, at least a decade ago, the average multiple for the S&P 500 was around 12.5%. Price to earnings is around 12.5%. It's currently at 27, so it's disconnected from its historical norm. But you can say that's great. We're in the age of AI and everything's wonderful. But the only reason a company trades with a PE in the 20s or especially in the 30s is if you believe there's a lot of future growth to still happen, and you can discount those cash flows from future earnings back. Any stock trading at 34 times earnings is pretty out there crazy. It means you're probably expecting 20+% growth rates in the future. What's crazy about a company like Microsoft or NVIDIA or whatever, if your capital base, if your current valuation is already in the trillions, do you know how hard it is to go at 25% a year? That's what seems outsized. The historical performance of these companies has been truly mind-blowing. I mean, NVIDIA is the perfect example, right? Yeah. They've done things in the past 5 years that basically no company has ever done, and they appear to be on fairly solid financial footing. But if your company is valued at $4 trillion. How do you grow at 30% next year? Just another trillion? When 5 years ago, the company traded at what? Like, I don't know, 800 million in market cap? I should pull it up. You get the point, right? To say that these smaller $100 million companies or whatever are going to grow or double or triple, it's one thing. To say that a $4 trillion company is going to double in the next 2 years is basically insane.
And I'll actually add on to that, because the belief that you'd have, if you're doing the math, the belief that you'd have is that it has to do much more than that in order to justify, to break even, I'll call it, on the current valuation. The growth rate you just said has to happen. But if you're buying the equity, you believe that the value is going to go up. So you both have to justify its current price and justify its future price.
And this is why the NVIDIA management team is a bunch of heroes of mine, not only because they made the world's greatest chips, but because they've done nothing but sell that stock for the past 24 months because they're geniuses. It's so great. They can actually do math, Doogles. The people at the management team at NVIDIA can do math. It's really, I really love it.
Yes, there you go, man. You got anything else?
That's it.
Well, thank you for joining, everybody. SkippyDoogles@gmail.com if you have comments, questions, other listener mail.
Yeah, normally we ask for listener mail. Sorry to interrupt there, Doogles, but hate mail, SkippyDoogles@gmail.com specifically for Doogles, all right? Please send it our way.
And if you want to become a premium listener, SkippyDoogles.supercast.com. You get episodes early, you get special drops, other research recommendations we don't drop here on the show.
Yes.
Anything else?
That's it. Talk to you next week.
Thank you.